Hello and welcome to Ask the Flexpert, our energy research series on everything flexibility and batteries in Europe. My name is Eva Zimmermann and I'm leading our work on European batteries and flexibility. And in each of these episodes, I'm interviewing one of our local Flexperts on one region in Europe regarding the prospects of battery build-out and battery economics. Today, I would like to talk about Bulgaria and Romania, which are really up-and-coming markets. We hear more and more about them. And the Flexpert today is Filippos Falieros from our Southeastern European team. Thanks, Filippos, for being here today with me.
It's a pleasure to be here. Thanks for inviting, Eva.
Great. So, without further ado, let's just dive right in. As mentioned, we are increasingly hearing more about Romania and Bulgaria as being very attractive BESS markets, and they are very close geographically as well. But is it also the same drivers for the attractiveness?
First of all, yeah, I have to agree, they're very attractive. On a Southeastern European level, these two markets are the most attractive in the region, but for slightly different reasons. Even though the two markets are geographically very close, the revenue drivers and policy dynamics are actually quite different.
That's interesting. Let's dive into it one by one. Could we start with Romania? What is driving interest there?
In Romania, the main driver, I would say, is balancing markets, which has shown very strong volatility, and that creates opportunity. On top of that, we also have attractive intraday and day-ahead spreads, especially during spring and summer months, plus ancillary services already contributing a lot of value. On top of that, the regulatory framework is improving for batteries, especially with the removal of double taxation on network tariffs, which has made an investment case clearly stronger. And on top of that, we also expect more revenue stream to be available for batteries. That's coming from storage participation on the FCR market in the near future.
That sounds like a very solid setup with a lot of revenue streams that batteries can access. How does Bulgaria compare to that?
Bulgaria is a different story. There the market is driven less by ancillary services, mainly by strong investor appetite, attractive summer spreads, and of course a very well-designed subsidy scheme.
Okay, let's unpack that bit by bit. So you say arbitrage plays a bigger role. Why is that the case?
Bulgaria today, arbitrage actually is the only route to market, the main monetization source, largely because batteries still do not have full access on balancing capacity markets.
That's interesting. Do you think that will change in the future? Will they get access soon?
Yeah, definitely. And I think that's an important part of the story. Bulgaria looks very arbitrage heavy today, but that's mainly because ancillary service monetization for batteries is still underdeveloped. As market access improves, I would expect the revenues to stack to broaden, which would make projects more resilient over time, especially as arbitrage spreads will start to normalize.
And you also mentioned the subsidy program as well. And I would like to understand a bit more about that. How large is the program actually?
The first major support was from Restore. It approved 82 standalone battery projects, totaling almost 10 gigawatt hours, with a budget of 590 million. So yeah, definitely a very big support scheme. And what's also relevant is that the initial target capacity for Restore was just 3 gigawatt hours. So it's less than 1/3 of what was achieved.
Wow, that's very impressive, and it's really a huge volume. If we set that into comparison, this is more storage than Germany has already installed today, and Germany obviously is a much bigger market. If I wasn't able to capture these subsidies in the first round, and I'm entering Bulgaria now, is there a follow-up round?
Yes, actually there is. It's Restore 2, targeting about 2 gigawatt hours of storage, smaller budget as well, 120 millions approximately. And yeah, we also have the results for that. It supported 31 projects and achieved an installed storage capacity of 4 gigawatt hours, so more than double the target.
Wow, so that's a very strong pipeline. But I was wondering, we have seen strong pipelines all across Europe before, but quite often they ended up consolidating a bit. Do you expect all of these projects to actually come through and being built, or will the pipeline consolidate as well?
We always take the support schemes targets with, let's say, a bit of salt. Aurora suggests roughly 4 gigawatts of storage capacity in Bulgaria, but that will not be built immediately. Our current expectations is that we'll reach a bit further than 3 gigawatts until the end of 2026. The battery capacity will continue rising towards 4 gigawatts by 2030. But yeah, what you raised here is quite an important point. There is a difference, there is a gap between headline support volumes and what actually gets delivered on the ground.
Yeah, and I think that connects very well to the next question I would have, because both Romania and Bulgaria are rather small power markets, as already discussed. So I was wondering, how big is the risk of cannibalization in light of such big capacity additions?
Yeah, cannibalization definitely one of the main risks for both markets, but timing, I should say, is different. Using Kronos, our software, which by the way we're also launching for clients in the Southeastern Europe, we found that in Bulgaria it's more of a near-term risk, where in Romania it's more of a medium-term, something that, yeah, markets we expect to be cannibalized after 5-7 years.
Okay, and why is it sooner in Bulgaria?
Bulgaria it's sooner because, first of all, it's a smaller market. Deployment of batteries is moving quicker than Romania due to the support scheme. Ancillary service market depth is limited. So yeah, more batteries come in. A lot of them are competing for the same day-ahead intraday balancing energy opportunities, and that naturally puts pressure on spreads over time and opportunities.
Okay, and why is it that Romania actually gets a bit more breathing room?
Mainly because the revenue stack in Romania is broader, especially across balancing ancillary services. Market size also helps. Penetration rate for storage in Romania is slower compared to Bulgaria. That said, yeah, I would still be cautious around saturation on some specific markets in Romania, such as the FCR or the AFRR, because market depth there is quite limited. But yeah, that mainly would be a dispatch shift on the following years before we see this cannibalization effect.
Yeah, and what we also saw when looking at historical spreads as well in both markets is especially remarkable are these summer spreads that we see in both, right? Because we have solar driving down the prices midday, but then it's very hot. We have a lot of demand on the system, prices going through the roof. In the evening when people are still using ACs, coming back from work, and basically no solar anymore in the system. Based on what you're saying, I would assume these tremendous summer spreads are not staying forever, right?
Yeah, I mean, even though today's spreads are very attractive, especially for the removers, but they cannot be taken as a permanent, let's say, feature of the market. As more storage is deployed and more flexibility on the demand, driven also by smarter EVs, those spreads are likely to come under pressure in both markets.
Okay, got it. So, based on this outlook, if you were a developer in both regions, what would be your go-to strategy to develop successful BESS projects?
So yeah, if we're discussing beyond support schemes with limitations, the go-to strategy is really co-location, and especially with solar. Compared with standalone batteries, co-located projects can benefit from sharing some significant costs like sharing the grid, the land, inverters, grid transformers. And we estimate that this can roughly add around 1.5 to 2 percentage points in IRR. And it also helps on the downside scenarios where arbitrage revenues start to weaken. And downside scenarios usually are the ones that are the most important ones for lenders and reaching out support for financial institutions.
As you mentioned, financial institutions, another important topic, I think, is the possibility to have contracted revenues that are not based on merchant optimization. How big of a role does tolling or hybrid PPAs play in both markets?
Yeah, actually, I feel like both markets can benefit from contracted revenues, either tollings or hybrid PPAs. Lenders are still uncomfortable with merchant exposure. The volatility of a fully merchant revenue project has also a lot of fluctuation from a month to month basis. So over time, these kind of contracts will be increasingly important, especially on projects that are not under a support scheme. And yeah, we expect that the market will mature, and we see now there are a lot of discussions about different contracting options. Might be hybrid PPAs, might be tolling agreements, might be day-ahead swaps. So I'm expecting in the future that we find an approach that works best for both investor and off-taker.
Thanks a lot, super interesting. There's actually another thing that I'm really keen to understand in markets that are so immature yet and that are so upcoming and new, which is the overall situation with the grid. Because what we see in more mature markets is that one of the major challenges that batteries have is something connected to the grid, getting onto the grid, paying grid fees, and so on. We discussed it in the German episode, we discussed it in the Dutch episode. Do we see something similar in Romania and Bulgaria as well?
Yeah, actually, in both markets, grid constraints exist, but they look quite different. In Bulgaria, for example, the main issue is more around operational bottlenecks.
Okay, and what does that mean?
In practical terms, it means that some batteries cannot always charge or discharge freely at their full capacity because the grid cannot absorb multiple assets at the same time through a shared connection point. In Romania, the issue is more about grid access administration, long queues, speculative reservations on the grid, charging allocation rules. However, move towards auctions, higher financial guarantees, stricter deadlines is a positive step towards the right direction, but it also adds another layer of execution complexity.
Yeah, okay, got it. Keeping all of this that you told me today in mind, what is the key thing that international investors should look out for if they're looking to invest into Romania and Bulgaria?
I think the key point of international investors is that there's a clear trade-off. Romania offers more diversified upside, stronger regulatory momentum, it also comes with more complexity around market entry and grid access, while Bulgaria offers faster near-term deployment, very strong arbitrage on the wholesale markets. But yeah, since it's a smaller market, it also comes with a higher saturation risk from market price volatility to be cannibalized sooner.
Okay. Thanks a lot for this conversation. I learned a lot about Romania and Bulgaria, these two very upcoming new flex markets in Europe. If you have any questions about our offering, or if you would like to access Kronos for Romania, Bulgaria, which Filippos just mentioned before, please reach out. And otherwise, happy to see you at the episode next time.